Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Thursday, September the 8th. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then when we drill down to our trade levels, our targets, and our hypotheses. We create multiple hypotheses so that we have a plan in place depending on what the market does. And make sure that we know what we're going to do based on what the market gives us. This is a subscription room. If you're interested in checking us out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. We do everything here in the live go-to during the pre-market session, and then we do live trading analysis during the course of the RTH trading session. Before we go, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see on Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, yesterday our Hypo 1 was a open auction in range and a move down to the 77 to 79 area, find buyers and rotate up through and take out the primary target of 86 and then continue on up into that 2190 and a quarter. Our secondary hypothesis was a open auction in range, a failure to break out or a false breakout, and then rotate down through to the naked VPOC and then testing through value area, and then chopping around and getting a late day probe down possibly to that 72.50 CLVN. This is all based on the September contract. We got a bit of both. We had Hypo 2 play out early in the day, and then Hypo 1 kicked in, and we didn't quite get out of range, but we did get a trip up through value and up to the 85.50 area. So a little bit of a combo of Hypo 1 and Hypo 2. Taking a look at news. This morning we had the ECB announcement. They did not increase their rate. It's still at 0. We had Canadian building permits was expected at 3.2, came out 0.8. It was a miss. We had NHPI month over month 0.2, came out at 0.4, and the Canadian capital capacity utilization rate came out at 80 versus 81.5, and then unemployment claims for the U.S. Came out better than expected, 259 versus 264. We have natural gas at 10 o'clock. We've got crude inventories, which will be the big news today at 11 o'clock, and then we've got consumer credit at 3 in the afternoon. Of course, the big news today is it is rollover day. I am now rolled over to December contract, so all our homework and all our trading will be done on the December contract. We have a 6.5 point spread between the September and the December contract. So I don't know if you're trading the September or the December contract. There is enough liquidity in the December contract, but the volume will still be today in the September contract, and as we move towards quad witching next week, that will eventually shift over to the December contract, and we'll probably get some equalization going on. Just stepping back, taking a quick look now, everything is in the December contract now, so we have a new adjusted all-time high at 2184. Our previous is 2191.50, so we have that element of unadjusted between all-time highs. This is something that I watch very closely. I do expect at some point in time that our December contract will trade up to the September all-time high at 91.50 to equalize that high. Will it be today? Don't know, but it is something that I will watch, and depending on what's going on, I will trade towards that as a primary target right now. Just going back to the monthly, of course, we're only going to have several months because of the September rollover. TOS, even this is my paper money account, TOS does not adjust their continuous contract until sometime today. So right now I've switched over to just the Z contract. I usually keep a continuous contract on these charts for my basic homework. But we've had this strong trend up. Of course, we challenged the trend in the end of 2015 and beginning of 2016, and then they've taken it back, and we've been on this wild ride where we've just gone up on the slow grind. Taking a look at the weekly, we do have good slope and good separation. The trend is still up. We don't even challenge the weekly until we get down to 2155 area. So we're just basically consolidating up here near the highs, but the trend is still up on the weekly. On the daily, we're just in the sideways consolidation, one of the tightest ranges. When we break out of this range, it should be a good move to either direction, but we are in a rather tight range. We are above the 9 and the 20, but we don't have any slope and we don't have any separation, so the trend is weak to the upside right now on the daily. Moving to the intraday, we have we did have this downward trend, and then they took it back and they started moving up. Now we've broken below the 9 and the 20 on the 4 hour, so we're challenging the trend on the 4 hour time frame. Going to the 1 hour, you can see same thing. We've rolled over, and now we're below the 9 and the 20 and getting the possibility to start of a new downward trend. Going to the 30-minute, same thing. We're now getting slope and separation. They backfilled up to take out the naked cross. We just took out this naked cross right here at 75.50 that we were watching on the 30-minute, but the trend is starting to the downside on the 30-minute. On the 5-minute, same thing. We've got good slope and separation. We did put in a naked cross above us up here at 2180.50. But strong trend. We do have a possible foo-bar Mr. Sneaky that could set up here with this volume spike. Going to the 5-minute, I should say, you can see that we have been trending down after putting in a overnight high up at 2182.75, and we are creating this technical gap, and we could get a foo-bar Mr. Sneaky and a rotation back up. A gap close right now will take us up into the 76.50 area. So let's take a look at the big picture. Now, of course, this composite and micro composites have all been adjusted to the December contract. So the levels change, but not the structure. So we still have this double distribution, almost a triple distribution on the microcomposite that runs from 7/12 through to yesterday. We have several microcomposites, larger time frame microcomposites that we're looking at, but the longest time frame, our microcomposite VPOC, is now 72.75, and we're trading 74. The longer time frame microcomposite VPOC and the shorter time frame microcomposite VPOC are both at that 72.75, and then we have this 4-day microcomposite which has our VPOC up at 74.75, and we're trading that right now. It's in this distribution zone. I have another microcomposite that I'm running from 8.25 to yesterday, and that microcomposite is down here at 72. So a big, huge amount of confluence in terms of price acceptance in this distribution zone. We're really filling it in now. We did have this double distribution here, which was 77 and 79.25, and now it's 72.75 and 71, but it's 72.75 is taking control of this area, and they're accepting price higher. Key line in the sand above us is the 79.50. I'm actually going to use the 80 1/4 because it is the range high from yesterday, and that puts me above the 79.50 CLVN and will be a breakout of the microcomposite and yesterday's range high. And the target, of course, is going to be the 83 1/4. Our our RTH all-time high up at 84.75. And then if we get above that, I'm looking for an equalization of that high up there at 91.50. Key line in the sand below gets shifted down to 66, below 66. Look for them to come back into what was 67 1/4. It is now 60.75. 60.75 is a very important level for us. It is where we launched from right here. You can see that we came down, and the last most accepted price before we pop back up into this value area is down here at 60.50 area, and that is right at the microcomposite value area high of this prior value area. And if we get inside of that, then I'm looking for a move further down to what was 60.75, which is now 54 1/4, and then the 53. And then the key support level is going to be down here at 42.75. Anything below 42.75, we have air down here, and expecting to come back and start filling in these gaps, and most likely make a bigger trip down to what was 42.50, which is now 35.50, and the composite VPOC and the microcomposite VPOC from this balance area down here that we were in for so long in this blunt area, but the most accepted price going back to 2013 is now 20.35.50, where it was in the 42s prior. So that's taking a look at the big picture. Taking a look at the overnight. We basically, traded inside of the microcomposite, or not the inside of the value area and around the VPOC from yesterday for most of the night, and then we tried to go up and continue the move up towards that 83.75, and they failed, and they rotated down, and they chopped around here, and then we just had failure after the news, and we're currently trading 75 1/4. We are near the overnight low, so we could put in a new overnight low, but let's put our levels in right now. Our overnight high is 82.75. Our overnight low currently is 73.75, which is one tick below the value area. I've been noticing a lot of this lately where the Globex has been trading inside of value. And then our overnight VPOC is not likely to change. It's going to be right on top of yesterday's VPOC at 78. And then we have an LVN here at 75.75, which was right at the midpoint. And that's about all the information. You have another little bit of a LVN here at 79.50, but I'm going to be using the range high from yesterday at the 80 1/4. So that's all the information we need from that. Just taking a look at some of the bigger numbers here. Our all-time high December contract, 84 1/4. Is it 84 1/4? Just let me verify that. Sorry. I thought it was 84.75. No, it's 84 1/4. So we have our December contract at 84 1/4. We have our unadjusted all-time high at 91.50. Our 20-day ATR is currently running at 14.43. I had put this in earlier. This has got to be adjusted. So off of the current overnight low of 73.75. Plus 14.43. So that gets adjusted down to 88 and a quarter. Of course, we've got the all-time high. We have a couple measured moves, which have been adjusted now to the December contract at 87 and a quarter. And we have another one up at 22.0350. Our weekly ATR upside target is 22.1350 off of the new weekly low at 21.66. And our downside ATR target's down here at 68 and a quarter. And our weekly is down at 21.35 and a quarter. So in terms of levels, our key line in the sand is going to be that 66 right here. And then I put in some of the levels here. Our key target below the 66.50 is the 60 and a quarter, and 60.50 was 67 and a quarter and 67.50. Then we've got a little bit of support at 59, and then the next big target below is going to be that 54 and a quarter and 53, and that's our microdeposit VPOC target if we get below the 66. I think if we get down here this time, they're not going to hold. We're going to come through and test those lows. 42.75 is the next key support line. Below that, target 40. And then our weekly ATR down at 35, and then we've got another key line in the sand at 31.75 with target at 27. I don't think we're going to get down there today. And we've already done the upside targets. So putting in our key levels, we do have that 71 area. That is the range low. If we break below it, then I'm looking for us to come down and test that 66 and test the daily ATR down here at 68 and a quarter. We are going to open up, below value but inside a range, but we still have a fair amount of time, so we could go pretty early 2.5 points. I'm sorry, 1.5 points. Now 1 point below taking out the overnight or yesterday's low. So what are the hypotheses for the day? Well, we have to kick in and we have to be thinking about the possibility that we're going to see the pit bulls. When we come up into quad witching and options expiration, there's a high probability that on the Thursday and Friday of the week before the options expiration, we could see a week low put in. Our week low right now is 66. So if we don't hold the range from yesterday, I am expecting us to go down and test the 66 and most likely put in a new weekly low either today or tomorrow. And here we are breaking below. We're seeing some weakness, really seeing a lot of weakness coming in here in the last 30 minutes. So just be careful here. So it's going to be tough here to see if we're going to open in range or out of range. So my hypo 1 is an open auction just in range or just out of range. But the key to this is and we have a new overnight low put in too, and I got to adjust the levels. Hold on a second. I hate rollover. All right, so we have a new overnight low put in at 70. And likely put even lower one. So adjusting that's going to bring us down to 70. 84.50. And that's just one tick above the new adjusted all-time high. All right, so we're either going to open auction in range or out of range. So this is going to be a little bit sketchy in terms of our hypos, because if we open below value and outside a range, we have to think in terms of the possibility of getting an open drive. So my open drive is going to be my hypo 3. But my hypo 1 is going to be either an open auction out of range or open auction in range, and a move up into the 74 to 78 area, find sellers, and then rotate us down into the 66 and put in a new overnight, a weekly low, I should say, with the possibility of coming down into this 60 and a quarter. You know, we don't have, it doesn't say we have the range, but we're getting expansion and it's rollover, so who knows. So hypo 1 is an open auction just in range or just out of range, rotation up into testing the value area low through to the overnight VPOC and the naked VPOC, find responsive buyers, sellers I should say, and then rotate us down through to the 66 as our main target, and then chopping around there and maybe a late day probe down into the 60 and a quarter area. Hypo 2 is an open auction just in range or just out of range. Either a failure, if we're in range, a failure to break out of the range, or a false breakout, a push down into the between the 68 and 66 area, find responsive buyers, rotate us up, and the main target above is going to be 78. Chop around in that 78, try to break out of the range high from yesterday at 80 and a quarter, and possibly go up and take out this naked VPOC up at 83.75 and close somewhere up here. That's hypo 2. Hypo 3 is going to be if we open auction, call it a hybrid, because if we open auction out of range, I'm looking at the possibility of an open drive, push down to the 66, chop around the 66, get continuation down to the 60 and a quarter, and then fail the 59 and come down all the way down here into the 54 and a quarter, back into balance that we broke out of. So hypo 3 is dependent on being outside of range and getting an open drive down. Hypo 4 is a open auction in range, a move up into value and chop, okay, inside of yesterday's range with a late day probe up into the 82, 83 area. I'm not expecting a big move up today. So I'm looking for a rotational day with a tighter range. So it's tough on these rollover days because of the fact that you know, you're going to be having people trading both contracts, and it could get a little bit confusing. Just keep in mind that the 20 period the relative volume is going to be extremely light showing on my contracts. It's not really going to be something that we can use for a few days until the volume starts kicking in. So, you know, September or December is going to show late volume regardless, because the majority of the volume is going to be going through in the September contract. On the Renko Keltner, we have a move down below the Keltner lower line. We now have our first Renko reversal bar. Watch this bar right here. If it closes below, expect a line walk down to the 66. If we get a second Renko reversal bar, this is not a double Renko reversal setup, because the majority of this bar is below the Keltner lower line. So I won't take the double Renko reversal. based on that. But a move up, if we do hold inside, a move up into the Keltner center line is going to take us basically back up into the overnight VPOC and yesterday's VPOC and back into value, and a move above the Keltner center line will take us up into a breakout and the overnight high up at the 72.75. It's going to be tricky today, gang. So I think there's going to be a lot of false starts and a lot of movement in both direction. It's going to be rotational. So save your bullets and don't get in a bad trade and let it go for very long if it's proving you wrong. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.